welcome to Doc's Market Minute for Friday, September 11th. Now, yesterday what I did was talk about the fact that we have a potentially large amount of energy here on the daily chart, and the next daily swing is just about to start. You can see that the last time that we had this much energy, okay, which was back here in early August, that was around this time here, we were just a few days away from an eventual big move. And we also have the monthly chart, which is fully charged up now. So all of this nonlinear action that we've had for the past several months, this is nonlinear action. This is not yet trending action on the monthly chart. Has built up a lot of energy. And we are also dealing with the weekly chart, so we have mixed signals here. We have the weekly chart, which has obviously undergone a big trend to the downside, big linear move to the downside. So it's desperately trying to recover, and all of this chop that we've seen over the last couple of weeks is helping to rebuild that. But in the context of that, we can still have a daily swing. So we can still have a daily swing like this or like this, which is not really going to change these larger time frames all that much. These are the moves within the moves that I'm always talking about. So on a per time frame basis, we can almost predict when we're going to expect a higher likelihood of these moves. Now, which way is this going to go? Because we don't know, just based on the amount of energy, which way this is going to trend, to the upside or to the downside. This is where we need to watch price action to understand what's actually happening here. Now for this, I'll go down to the smaller time frames. So the 78-minute chart here is actually 5 times faster than the daily chart, which is why we use this factor of 5 between the 78 to the daily, to the weekly, to the monthly, right? So these are all separated by approximately a factor of 5. So what we need to watch for on the 78-minute chart is whether or not we're going to see this thing put in a lower high and then roll over and start making lower highs and lower lows. So right now we're seeing a daily uptrend with a higher low so far. Let me clean this up for you here. So far right now we have a 78-minute chart uptrend with a higher low, right? But if this rolls over and takes out this low down here, then we have a lower high and a change in polarity to the downside. And what that'll manifest itself into on the daily chart is a pull to the downside. So what we have to watch for is essentially this range here, from about 1990 to the top side down to maybe about 1910. So we have about an 80-point range here on the daily chart to understand whether or not the price is going to either punch through this and confirm the uptrend, or punch through the lower range of this and essentially set up a major lower high, which will likely lead to that retest of the 1867 level, I believe it is. Now, we went over this the last couple of days. Usually when we have panic lows like this, they are retested within the first couple of months. And usually the longer that it takes for the retest of that, the more panic that it induces, right? So everybody's like living through this bounce here and holding on by their fingernails. So sooner or later, we do get that eventual retest of that. Now, anything can happen. We don't necessarily have to have that. But in the normal case of a correction like this, usually we do retest the bottom. One of the scenarios that we talked about a few weeks ago is whether or not we'd see a V-bottom, and I believe that is now out of, I mean, based on what we've seen the last couple of weeks, no, we no longer have a V-bottom happening here. So we've gone into scenarios 2 and 3 right now, which is a large-scale consolidation, and that is either going to lead into some major lower high, which is going to roll over again, and more likely into a bear market, or we recover from here, and this ends up just being the 2015 correction, and then we march on towards higher highs. So next Thursday is the big FOMC announcement that everybody's been waiting for, to see whether or not the Fed will raise rates or not. Usually the market is not going to wait all the way until Thursday before it starts to anticipate what's going to happen. So somebody will blink first. Somebody usually knows something. I hate to say that about the market, but usually somebody knows something, gets some kind of tip, or reads between the lines, or rearranges the tea leaves in such a manner that they think that they know what's going on, and word gets around in terms of that, and then the herd starts to thunder in one direction or another. Usually we don't wait until the Thursday of or the day of that FOMC meeting to start the movement. So I expect this movement to start just about any day. Usually the power of a daily swing accounts for somewhere between 70 to 100 points of movement on the S&P. So right now we're sitting here right around the 1950-ish level. So by the end of next week we could be sitting up around 2050 or all the way down to somewhere in the mid 1800s. So we could be retesting the low by next week. With that, that's it for today's Market Minute. Have yourselves a great weekend, and we'll see you back here on Monday.